Today we are going to be looking at technical analysis on XAUUSD, which is gold. In our last episode, we made it very clear that the market has actually changed character. You can see here we pinpointed that point here. We started it here. You can see that change of character. There were various break of structures which resulted to change of character. And as you can see that here, we anticipated that the market was actually going to come to this particular zone here. There were liquidities at this point. Market was around here. The market was going to come to this particular zone here and come all the way down. But then, due to the market has changed character, of course, we're looking at the market going down. But then the market came to this point here, broke the structure here, right? So also in the journey of trying to fill this imbalance that we have stated, some days before now, knowing fully well that this market is actually going to come take out that imbalance, it's just a matter of time. But then what is really happening, right? The market is not really coming to take out that imbalance immediately, like instantly, right? So let's try to make our chart very clean. Let's just try to make our chart very, very clean. So I'll get some erasers here and just take out some things. So let's try to make our chart very clean. Okay. So this is what we are looking at. This is what we're looking at here. Okay, good. So there've been structures in place that the market has actually been following. This is some break of structures here, some break of structures here as well, that the market has been following, right? That the market has been following effectively, right? And there's just one thing the market is trying to do to balance itself, right? So we can see that very clearly. Now, this particular zone still stands, right? So this particular zone still stands, and where's the zone? This zone here, it still stands, right? It still stands for us because we are just going to. One thing about gold is significant points. Every pair has a way they trade, right? Every pair has a way they trade. And one thing about gold is that gold actually pays attention to key levels, right? Gold actually pays attention to what? Key levels. That's one of the unique thing about gold, right? When I say things like 10% buying, 10% selling, 80% waiting, right? It is so significant with gold. Like, if you're not someone that is so patient with gold, gold will give you that profit looking for, so far you enter it at a very significant level, right? So I've had my own fair share of trading gold and feeling so bad for not waiting, right? So that's why while trading, you don't necessarily just want to be clouded with the whole mentality of, oh, I missed this trade, or oh. So you just want to constantly ask yourself, what did I really learn, right, from this thing? What did I really learn from the result of this particular trade? Because if you're not learning, then only just participating in trading, but you're not growing, you're not developing. You understand? And that is a major issue, right? That is a major issue. When you're not growing, you're not developing, right? So if you look at this here, this zone here, let's go to the lower time frame. Right now, why don't I do top-down analysis? Let me take this out. So why don't I do top-down analysis most times? Because I feel that we already have zones that we have already paid attention to, right? I feel that we already have zones that we've already paid attention to, and all we have to do is just patiently wait for those zones, trying to get that part very clear. Patiently wait for those zones that we have outlined and get to see what the market will do. So where did we get this point at? What time frame did we get this? 30 minutes, 45 minutes, 1 hour, 2 hours, 4 hours, 1 day. Okay. So let's just go down again. So I'm just trying to make it a fresh diagram all over. again. So I think the best point was actually the 15 minutes time frame. Okay, so let me just take this out and get that fresh stuff again. Let me see here. Let's see. Okay, so this is what it looks like. But then I think I'll just want to maintain the previous one we had. Let me see. Just maintain the previous one we had. Yes, I'll just maintain that, right? So this is just the whole idea around this, right? So we're just trying to get those zones, those parameters very sharp and extend it to this point. Yeah, extend it to this point. Extend it to this point, right? Then get this parameter here. So this is what we're looking at here, right? This is what we're looking at here. This is what we're looking at here, right? A cell at this, within this zone, a cell within this zone, right? A cell within this zone all the way to this point here, all the way to this point, right? So this is what we're looking at for gold. Now, we're not saying that it must get to that point, but we're saying that this is our anticipation of what the market will do, right? And we are willing to patiently wait for this particular zone. This is already a sell side liquidity. So we're willing to wait for this particular zone to sell, right? Because you just don't want to jump into the market, just because you want to jump into the market, right? You just don't want to jump into the market just because you want to jump into the market or just because you feel that the market wants to leave you, right? No, never feel that way. Maybe you feel that the market wants to leave you and go, right? Good. So these are key level zones that we're looking at for. Now, there's also a buy point below, right, that one can actually buy, and if the market gets to that point and it will just take us all the way up there. There's a reason for this here, right? This point here can be a buy zone, right? This market just come all the way down and just go up and tap that point and go down. That is what the market can do, right? Yes, that's one of the uniqueness about the market. Markets can come to this point and go all the way up here, right, and come down, right? So there is also a possibility of what the market can do, right? So we keep our fingers crossed. Any of the key level zones are very, very good entry points for the market to participate and do its thing, right? So, but note that at this zone where this market is, you can say the market wants to go up, you can say the market wants to go down, but you cannot tell. If you're trading at this point where this market is at 3348, you're actually just doing a guesswork, right? You're just actually doing what? A guesswork, right? And in trading, you just don't want to do guesswork, right? So that is why you need to analyze your charts with the help of technical analysis. We know there's fundamental analysis where the markets can just have a mind of its own. You can't really follow up if you don't really understand it. But then one of the key levels of fundamental analysis that I know is that the market just uses this force of tapping those key level zones and giving you massive profits, right? So please, if you got value, do well to subscribe to the channel. Do well to join our community. Check in the description. You'll see the link to join our community on WhatsApp and Telegram. Do well to comment if you have a question or contribution, and know we're here to help you win.